I'm Krishna Rao. You can hear me? I'm privileged to be among experts. The subject is very, very focused on cash management. As all of you know, cash management is payments and receipts. And I've been fortunate to be in Treasury during the transition from the cart track to the expressway. Around between 10 and 15 years ago, the origination of receipts and payments used to happen with the user, with the company. Incidentally, I am representing the user. So what was happening was both payments and receipts used to originate from the user, from the customer, end customer. The checks used to come to the user and user used to originate the credits, the receipts. During this period, last 10-15 years, a lot of changes have happened from the regulatory side, from the technology side, from the customer technology side and from the bank technology side. All have moved rapidly, all have contributed heavily, and we have now entered the expressway. It's relevant. Why this whole thing is relevant to cash management, it will come out as we go along. The user had control on both payments and receipts. When this move happened into the expressway, the user started losing control on the receipts. Payments, he always had control, he continues to have control. Now the receipts of the user are coming directly into the account without any intervention by the user. Now most of you will realize that what do you do with reconciliation if you don't know how things are coming in? Luckily, the technology has helped in some of the aspects of it. There was a huge challenge in identifying who are the people who are making payments into our accounts. Fortunately, one solution has been found. The virtual accounts have been created where the user is able to know who is paying. For each customer of the user, virtual accounts have been created and we now know who's paying. But that is not sufficient. We also want to know why he's paying. Because as you all know, there are multiple products being offered to the customers and there are multiple reasons why the payments are coming in. And just knowing the name of the customer is not enough. This has continued to be a challenge. The major challenges was speedy movement of funds into our accounts. Thanks to progress on all fronts, that is substantially addressed. Thanks to some innovation in technology, we also know who's paying. But why he's paying and what adjustments have been done to the payment is unknown to us. Now this is an area which has to be tackled at the technology level. At present, there is a question I'll be asking you in between my talk. Some of you can enlighten us all. There's a remarks field in every bank transaction, in a payment and a receipt. This is an unstructured single field. This is my understanding. People can clarify. Now, this one is an unstructured field and lots of information needs to be captured in this. And how does the user make sense of the information there and how does one enforce discipline in capturing this information? The time has come to do something about this. And from a user perspective, no amount of information is sufficient. If you, let's say, put in half a dozen fields, somebody might come and say not enough. And each customer would want information in a different way. Many of you must be knowing examples. Since this transaction is happening out of the blue and the customer wants lots of information at that stage for making sense of it and to use it in operations and to maximize his response to what is happening. So at this stage, can somebody confirm whether any progress has happened in maximizing the use of this information field? Or is somebody trying to do multiple fields? I'm unaware of what is happening in this field. Or it still remains that single information field without any structure. Any idea? As users, all of you are aware that there is one, in every bank statement there will be one remarks where people write something, who paid and things like that. Yep. Paid by check, paid by cash, drawn through ATM. That type of information is there, but that is not enough. What has happened is, during this period, the user was in control because the checks used to come to him and he used to go and deposit. He knows the customer. He has contact with the customer. He can ask, why are you paying, which invoice, have you made adjustments? Now that is gone. Now directly the credit is coming and there's one field and across so many branches, is there discipline in how the field is entered? You can't enforce it. A letter from the user to the bank saying that you capture it in this format is not going to do the deliver goods, because how do you enforce discipline over human beings? You can't do it. So I'm assuming that that has remained the same. That information field, that single field, and has remained the same. That is not sufficient. Now we have moved. We have moved into this technology age. We have got onto the expressway, and it's not enough. So I guess the time has come for the dialogue between the bank, the technology companies, and the end users to get some discipline into this information. And from technical point of view, it's called pull versus push technology. Previously, most of it was pull. If you see earlier, 10 years, 15 years ago, it was a pull because you were the one who were depositing the check into a customer's account. So it was a pull. A payment was a push, but the control was with the customer. Everything he knew what was happening. Now on one side, one important side of cash management, you are a little in the dark. Now this is something that I don't know. I don't think any one person has control on this, but the time has come to between banks and the technology companies to restructure the whole thing. So there's no choice. The customer is never satisfied, wants lots of information. It is the customer's operations intelligence. That information technically can affect every area, not just reconciliation. It affects production also. Let's say a car company. If the customer can get an idea of which model, which color, which car, it can directly feed the operations, production. The time has come to tackle this issue, and this is the only remaining issue that is not tackled. The speed has been handled. The customer identity has been solved thanks to these virtual accounts. Now, I understand that not much progress has happened, and there's no way we can continue without solving this. Now, from a next steps perspective, what is it that a user is looking in cash management? We covered one major area. There are other areas which were addressed a little earlier. Previously, people had some control, not just control, people are involved in all the transactions. So if a fraud was happening, there's a higher likelihood that somebody can get to know of it, potentially get to know of it. In an automated situation, if something is going wrong, you'll get to know of it maybe a little later. So this incorporation of intelligence should happen because the nature of doing business has changed. There's a need to capture abnormalities and absurdities while they're happening. Let's say usually a customer makes payments for supplies. Sometimes there's a refund because the transaction didn't go through. But if you see a substantial refund or refunds happening to be in excess of payments, there's a need to capture it early. I'm aware that certain frauds have taken place. People were refunding more than what they were receiving. So because there's so much automation, because there is so much progress, there is corresponding responsibility to capture the abnormalities in the system. It becomes a responsibility. Now, this is the second issue that I wanted to convey, is the need for change, the need for incorporation. Just to go back, who all have participated in this move from the cart track to the expressway? The banks have moved into core banking, so lots of automation happened with the banks. The users, the corporates have gone into ERP, tremendous automation. The RBI has introduced instruments like NEFT and RTGS, which has speeded up the process and which has helped people, the customers, end customers, to directly make payments. Now, everybody has participated, but there's a need for all these people to now participate in making sure that the controls that existed earlier are compensated in a different fashion so that things move smoothly. Broadly, I have covered very briefly what is involved in cash management with a customer. I think I'm done with the core issues. I can take questions.
Yeah, yeah. This is Sudhir here. It is more of an observation or a point to make. I think you have brought out a very important issue in the either it is a corporate or a consumer payment angle. We did an exercise some time back looking at what does payments actually mean for end customers, right? What do people perceive as a payment experience? And in that, one point which emerged when we analyzed different angles and all was the notion of control, right? And when you look at control, there is an implicit control when you talk about cash. So when a customer makes a cash payment, it is always, you can not pay more than what you have, right? And you also have a physical control on the whole activity. And that's where people felt cash payment is very core to people, right? But when we looked at credit card payments, the basic thing which was coming out was everybody knows about the transaction except the person who has actually done the transaction, right? You may get a slip at the merchant saying this is a transaction you have done, but you don't have access to that information immediately. So which is going back to your receipt problem, right? Now, one of the technologies that we have, and coming back to your question on the remarks part, I think yes, the traditional way to solve that problem is give more structure to that information. So instead of remarks, you can break it down into 10 other fields and then ask people to enter that. And we have seen that happening in, like, for instance, the modern core banking systems when they have come up and when they have implemented, managers have complained that productivity has gone down because there is more data to enter in those new systems and people are taking more time to capture all that information. So one technology that we are investigating currently is to deal with this kind of unstructured information and not go the traditional route of putting more structure and forcing users to give more information is the semantic technologies part. There is some advancement which has happened in that area, but we don't see much use in a financial services context yet. So we have done a couple of things on the customer interaction front. So when I as a customer go to a bank and a salesperson or the teller in the bank wants to interact with me, what kind of contextual information do they have to be able to interact with me better, right? So you can capture the last few interactions of the customer, but do you know what is the need for that customer? What is he really looking at, right? Your CRM tools can give you, or analytics tools can give you history about what can be done, or what can be proposed to the customer based on the past history. But the last few interactions, what is the customer actually looking for, is difficult to get. So we looked at how can we use some of that unstructured information and use a little bit of a domain ontology models to interpret that. Now that seems to be a promising technology which seems to give some meaning in terms of how to interpret that unstructured information without putting too much force on the user to enter it. So maybe there is a relevance of that in the problem that you are stating.
Yeah, but from a user perspective, we wanted highly structured, unambiguous information. And that requirement will never go away. No matter who you speak to, that requirement won't go away. Because everything has changed, and we are left with this helpless, almost helpless situation, where some information is coming, but it's not in a structured manner. We are at a situation where we can't continue unless this issue is sorted out. So in your interaction with the banks, this subject has to come up, or banks also are interested because their customers are going to keep shouting. So there is no real choice.
Krishna Rao, I got two questions. One, when you say that this structured information or the remarks column being classified into that it can be accessed easily in a timely fashion by the end customer, it falls into two categories. One at the analytics level, at the summary level. Two, for that transaction, what is the extra information? While at the analytical level, what can be done has probably been addressed by today's business intelligence or big data and to some extent even the semantics related people. But at the transaction level, I think people can only provide the remark as a bundle of information and at the most with some historical remarks being updated. But I don't think we have got the technology of giving the most relevant at that one. My second problem is, if at receipts you have got this problem because receipts as the control have been taken over from you to the bank, what will happen when payment also is control is taken over from you to the bank? When large corporations start payment also automated the same fashion, are you going to be in bigger trouble?
No. What happens is the outsourcing has happened, but the origination is from the company. So that control has not gone away.
Is it likely to go away with the ERP introduction and more automation?
I'm not able to see it now. I don't know. Honestly, even today, I'm not able to see a situation where the control on payments goes away. Because the payment file goes from the ERP system.
We as an IT company, we have this serious problem in receipts. Every time customer says he has paid us the money, we have got it into our database, but we don't know again which invoice he or she paid. So the reconciliation or what we call applying is a perennial problem for us. Receivables will say some $6 million, unapplied money will say $5.8 million. So we never know which has been. We see the receipts problem in reality also.
No, how I look at it is, if you can add multiple fields, there is a hope, there is a system, some discipline can be imposed on the person who's paying. Let's say we design a payslip. Each large client designs a payslip, supplies it to the customer, and he's forced to make the deposit with that pay slip. Let's say there are half a dozen fields. Every bank accepts that there have to be half a dozen fields. They may be blank, but if the customer is able to enforce discipline on the people who are making payments, and if they can fill up, they are supposed to fill up properly. We are not even saying the bank is responsible. We are just saying technology should have some minimum number of fields, half a dozen, minimum. The discipline can be imposed on the people who are our customers. That also is not there today.
Right now, some of our customers have an intermediary organization which pay us based upon the whatever the agreement, and they keep control of all the additional structured field data themselves, even though bank may or may not be aware of it. So when we raise a query, when we or our customers raise a query, they are able to provide this structured information. Banks as such, intermediary are not providing that.
I guess we are still in that gray zone, and at present, the customer has to be approached separately for getting this information. It's we are at a stage where we have progressed on all fronts. This front has remained. Actually, we are in a worse shape.
Hi, this is Hemant. Going back to your earlier comment about information not available about particular payments, and particularly when receipts are received, when the payments are received, they don't have the control. So I think there is significant movement happening on that front, but it has started with the larger organization and with the larger banks. Typically, these days, payments are originated through the ERP systems, meaning invoices will come, and then those companies which are paying, like say, for example, if you look at, like say, General Electric, they source components all over the world. So they will be sourcing components from China, some various goods, or like say Walmart, they are sourcing their merchandise all over the place, like China, LATAM, Indian subcontinent, and so on and so forth. So typically what they do is these payments are originated by firms like say GE or Walmart, and these are bulk payments, predetermined, approved. So these are the payments when they get originated. So it will be a reconciliation nightmare, not only for the recipient but even for the payer of the payments. Meaning, like say, if GE is interacting or dealing with, like say, thousands of suppliers all over the world, and if those payments are not reconciling, it will be a nightmare. So it will be very difficult to handle that type of situation from the operations point of view. So a lot of these payments, when they are initiated from the ERP systems, they include all the invoice details, the merchandise details, etc. And some of the recipients also, when the recipients are supplying material to multiple multiple companies, like say companies like in China, when they are like say selling material, they are not only selling to like say Walmart, but they are selling to n number of companies. So they insist that the payment advices should include references to the invoices, and then they also ensure the formats of the advice that they receive. So that movement has already started, meaning they receive information about what has been shipped, when it has been shipped, and when it was delivered, and then when it was approved, and in which currency, and so on and so forth. So that movement has started, but it's with the larger accounts and with the larger companies and with the larger banks. See, larger banks are definitely providing that, and definitely this is happening first at the corporate level, because cash management is more important for the big corporates, where they are like say moving billions of dollars and trillions of dollars, and then that is where they have to manage the float, not only in one currency and one country, but globally when they are managing treasuries, they have to see how this money is managed effectively. Even on the retail side, like say when the global firms pay out monies to retail recipient, like say some financial services firm, when they are sending the dividend payments, like they initiate those payments in like place like New York, and then the recipients are all over the world. Or like say United Nations is initiating payments, and then they are paying pensions to their retirees who are like say settled all over the world. So they ensure that the advices which go through the banks, like say Citibank, like which is processing those payments, so they give all the details, and when the recipients are receiving the payments, they will know why this payment has been received. Like say you may have multiple investments with the same bank, or you may be getting multiple payments from the same bank, like something will be about some investment that you are having, like like the way we receive multiple fixed deposit interest rates. So they initiate that, and then that is how the recipient receive the advice. But I think, to your point, I think probably this is happening with the large firms and with the large banks. Probably it has not gone to the lower level of banks or the smaller transactions which the banks are handling. I mean, that's my observation.
Yeah, I'm aware of what you are saying because some banks, you named Citibank, they have been pioneers in cash management on various fronts. They're ahead of the curve. They've been leading all along. They've been trying to do this. But you should realize that where all can Citibank be present? They worked hard, they've worked with associates, they have roped in half a dozen banks with huge presence. They tried to work very hard. Individually as a bank they worked hard, but there are limitations. Let's say they can cover 50-60% of the whole business. Now that is not how you run an automated system. So we want 100%. For that some structural change is required. Let's say we do 50%. Theoretically we reach a 50% level where lots of information is there, we are happy. But what do we do about the rest of the 50%? There is a need for structural change at this stage. I am aware of what this. There are some users, some customers and some banks who are working very hard outside the system, outside of ERP, outside of core banking, struggling to make more sense of this. And that's not good enough. And how do we make sure that all banks do it?
Right.
I have a comment to make. I'm Pratap here. When we are talking about more structure being laid into the customer data capture, I think we are going away from the customer experience part, because today's customer is more into, like what Arun had said, is more interested in customer experience more and see that he doesn't go into too much of structures and he gives his comments or whatever in a free flow kind of a thing. And it is for the banks to pick up that technology which picks up whatever is relevant from these unstructured data, like what Sudhir has pointed out. Maybe we have to look at that rather than trying to impose certain structures and data fields into the service, cash management service. It's an observation I just wanted to make.
It's valid. Actually, I have absolutely no quarrel with the customer experience point of view. If he's not required to give it, he should not give it. But when the customer is aware that from his perspective also, if a reconciliation happens properly, he is also one of the beneficiaries. Now when he is also interested, and if there is a format, let's say the fields are half a dozen, the discipline, because of the relationship between the payer and the receiver, there's a need. Both are interested. At least he should have the option of giving that information, because he is also interested. Today that is not.
Yeah, more than structure, Sudhir has already conveyed that it is a semantic technology that we have to brought in. Right, Pratap?
Yeah. Yeah, it's just another thing that a lot of banks are now tying up with network providers. Like I could give an example of Deutsche Bank tying up with Ariba and coming up with global solutions, which also covers a lot of small and medium-sized players. They've made it more like a transaction-based pricing for them to consume such services. So it's not like it's a premium thing for large corporations as such. But then there is also attempts that are happening at the lower levels as well, with different kind of lucrative pricing models and so on. So net, I think it is up to, like you rightly pointed out, the originators of invoice to sort of enforce an end-to-end automation service rather than putting a lot of pressure on the payees.
Yeah, while on this subject, we have experimented with a pull type of transaction in a receipt. What happens is we have a list of invoices the customer is supposed to pay, against which the customer is supposed to pay. Now, we have to have an understanding with the customer. He gives us the right, like an ECS. People are familiar with the electronic clearing service, where for miscellaneous payments, smaller payments, the receiver is able to draw. Equivalent of an ECS, you implement for large transactions across the board. That's not possible. At least we are not able to reach that situation today where you pull. When you pull, you know for which invoice you're pulling. But that consensus has not yet been arrived. I don't know whether regulators will permit it for large transactions. They have permitted it for minor transactions and regular transactions. Now, that is one solution, but all of them are patches. They are not systemic solutions. Yeah, it's basically a struggle in a difficult situation. It's done. Thank you.